Right, good morning everybody. Thank you for joining Matthew and myself today. By way of a brief introduction, Matthew's a senior associate in our insurance disputes team and I'm a senior claims handler. We both have experience in dealing with these sorts of matters and with dealing with the FOS. So purpose of today is to take a very brisk review of the Financial Ombudsman Service, which I'm going to abbreviate to FOS because we have limited time, and we're going to be looking at its approach to disputes which involve policy coverage. And these arise where an insurer decides to either decline cover due to non-disclosure or for representation issues which have arisen. We also plan to look at limits and jurisdiction, and this is with particular reference to the Consumer Insurance Disclosure and Representations Act, which we'll abbreviate to CIDA, and also the Insurance Act. So the first point to consider is whether the FOS can actually look at the complaint in the first place. And it can't look at any complaint from any old policy holder. There are limits, and there are limits on what it can consider and what it can actually do. And Matthew will now briefly take you through these. Over to you.
Thank you, Claire. Because we're talking about coverage disputes, and I'm going to refer to the insurer on the one hand and then to the complainant or the insured on the other, despite the fact that the result of the dispute might be that the insured isn't actually insured after all. There are essentially 5 key limitations to remember. The first is their complaints process. The FOS expects insureds to follow an insurer's complaints process before taking their complaints to the FOS. If they haven't done that, then they will usually send the complainant back to the insurer to follow that process. Number 2, time limits. There are time limits for bringing a complaint to the FOS that are broadly analogous to standard limitation periods, so 6 years from the cause of action or 3 years from the date of knowledge if that is later. The time limits don't work in precisely the same way, so they should be checked. There is also one other time limit to be aware of. Once an insured has made a complaint and the insurer has looked at it and issued a final response, then the complainant has 6 months in which to advance their complaint to the FOS. If they don't do that, then there are limited circumstances in which the FOS can consider that complaint, although we do sometimes see the FOS stretch time limits in a way that perhaps a court wouldn't. Thirdly, territorial or regulatory limits. The FOS will only consider complaints that relate to UK regulated entities. Overseas regulated entities, well, you need to complain to the relevant regulator. Fourth, there are size limits. The FOS is essentially for consumers, for individuals. It also deals with complaints from micro enterprises and small businesses. Now, those two are slightly different, but put very simply, the complainant needs to have a turnover of less than 6.5 million and either a balance sheet total of less than 5 million or employ 50 employees or fewer. Any bigger than that, and they cannot use the FOS. And the fifth and final one is award limits. Now, strictly speaking, this comes at the end of the matter when the FOS has reached a decision found against the insurer, decided to make an award. But I'll mention it here just for neatness. There are limits to what the FOS can award. The current limit is £355,000. That will increase year on year in accordance with the Consumer Prices Index. For older complaints, the limits are a little lower, so you do need to check the precise rules. And as an aside, part of the relevance for that is if there is a complaint has a value potentially of more than £355,000, then the insured can't accept that award and then bring a separate court claim. They have to decline the FOS award and then sue separately. With that, I'll hand back to Claire.
So, thank you, Matthew. That's limits and jurisdiction dealt with. So how does the FOS approach disputes which involve CIDA and the Insurance Act? Well, it has produced a rather helpful little guidance note for businesses, which confirms the things that consumers usually complain about. And this includes, for example, that no representation has been made and also that the insurer has treated the complainant unfairly by either altering the policy terms or by declining cover in the first place. The guidance also assists firms. It tells you exactly what the FOS looks for when it detects one of these complaints hits its desk. So the FOS, when confronted with a CEDA complaint, for example, will generally look for the following types of evidence: whether the questions were asked, whether they were clear, and were they specific? Was the information given to an insurer inaccurate? Would the insurer have done anything differently if accurate information had in fact been provided? And would the insurer have handled the misrepresentation fairly? Now, the FOS will consider, as part of its deliberations, evidence, for example, like screenshots of any online application. It will also listen to things like sales calls. And it's best to bear in mind that the consumer still has to take reasonable care not to make a misrepresentation. So if something's unclear, for example, pick up the phone if you're applying for the policy and ask or make reasonable inquiries. Regarding what happens when a consumer doesn't take reasonable care, then an insurer is expected to take a proportionate response. And that can include settling a claim, but taking into account any premium changes which would have been made, offering different terms, and also settling proportionately. CEDA sets the remedies out, and it's clear that the FOS will expect a firm to consider those when it makes any sort of settlement. The FOS approach to policy disputes which involve the Insurance Act sort of matches that towards CEDA. And this broadly represents how the FOS has approached these sorts of policy disputes for some time. And it's something that they're really quite keen on reminding people of. So, for example, in law for many years, a policyholder had no claim against an insurer which delayed paying a valid claim. And the FOS has been upholding complaints where this occurs, and that's happened, long before CEDA came in. So when the FOS looks at a complaint, it usually applies either the Insurance Act or CEDA. Under the Insurance Act, there are now new disclosure duties. And these create a new duty of fair representation. And the interesting thing is that there are duties on both insureds, so insureds are expected to disclose either every matter which could reasonably influence an insurer regarding the risk that's being covered, or provide sufficient information to put an insurer on notice that they may need to make further inquiries. But there's also a duty on insurers, and that's regarding the knowledge they should have or which should reasonably have been passed to the person who's making the decision on the risk. Brokers are not subject to any of those disclosure rules though. And in practice, this requires an insured to review their disclosure processes to make sure that they're doing what they're supposed to. And it also requires insurers to no longer take a passive approach to disclosure, and especially where remedies for non-disclosure are under consideration. So regarding remedies though, an insurer would need to show how it would have acted differently if it had the requisite knowledge or information to hand. And this can include, again, charging a higher premium, imposing a different exclusion or an exclusion of some kind, and also where there has been a deliberate or reckless breach on the part of the applicant, avoiding the contract and retaining the premium. So I'm going to hand back to Matthew, who has some examples of this in action.
Thank you, Claire. Yeah, let's illustrate the FOS's approach. And I've taken a decision from earlier this year. It involved Aviva. The insured in question had a fleet insurance policy arranged through a broker, but it failed to disclose two things. Firstly, it failed to disclose a prior claim on its private car insurance policy. And secondly, it failed to disclose a county court judgment, a CCJ. There was a car theft. The insurer investigated, and as part of those investigations, they discovered those previous non-disclosures, and they said they would not have covered the insured. They avoided the policy and they retained the premium. The insured, as formerly was, complained to the FOS. And the FOS's decision follows Insurance Act reasoning, basically. The FOS said, look, the CCJ issue was not the reason why you said you wouldn't cover them, so we're not going to consider that. That's not really relevant. The key is the non-disclosure of the previous claim on the private car insurance policy. FOS said that the insured must make a fair presentation of the risk, and that would include disclosing the claim on the private car insurance policy. It was the insured's responsibility to tell the insurer everything that they needed to know, and they hadn't done that here. If the insured wanted to blame their broker, well, fair enough, but that was a separate issue, and in fact the insured did bring a separate FOS complaint against their broker about that. The FOS then just had to consider whether the non-disclosure was deliberate, reckless, careless, or innocent. And it had a look at it, and it decided that it was just a mistake, as people make, and the insured was therefore careless under the Insurance Act. But Aviva could demonstrate that they would not have covered the claim had they known about that previous claim under the private car insurance policy. So they didn't act unfairly in avoiding the policy. However, because it was a careless non-disclosure, a careless misrepresentation, not a reckless or a dishonest one, then the insurer should have refunded the premium in accordance with the Insurance Act. And so FOS said that Aviva had to do that, and they had to pay interest at 8% until such time as they did. So a bit of a sting in the tail there. But that's pretty much standard Insurance Act analysis, as you would expect. But there is a key feature of the FOS's processes to be aware of. The court has to decide cases in accordance with the law, funnily enough. The FOS decides complaints in accordance with what it considers to be fair, just, and reasonable. It will consider the law, but a decision does not have to be strictly legally correct. So although the Insurance Act does govern the FOS's general approach, it can depart from that when it wishes. And again, let me just illustrate that for you. An example taken from the FOS's website, a case involving AXA. It was a commercial property policy. The insured did not disclose a report that hinted at subsidence issues, but later made a claim for subsidence, and insurers got hold of that report and they declined to cover because they said he hadn't made a fair presentation of the risk. They actually avoided the policy. It was a commercial property policy, so the Insurance Act applies, but the FOS decided that it would also consider the principles in CEDA. It said the insured wasn't a professional landlord, that he was just renting out a property that he had inherited, and therefore it thought it fair to consider the CEDA principles as well as the Insurance Act ones. AXA was a bit unhappy about that, as you might expect, but what could they do? You see that same sort of flexibility of approach in other areas too. There are reasonably flexible concepts in the Insurance Act at various points. For example, the FOS gets to decide whether a misrepresentation is fraudulent, reckless, careless, or innocent. And in our experience, they can sometimes give the insured the benefit of the doubt when it comes to that. And that flexibility can also give a wide variety of decisions. I gave the example earlier, the Aviva case from 2020, involving the non-disclosure of a claim and the non-disclosure of a CCJ. There is another case, again, decided by the FOS, the same person at the FOS, actually the same adjudicator, from 2018, involving Lloyd's of London. Almost precisely the same facts, a non-disclosure of a previous claim and non-disclosure of CCJ, but in that case, the FOS decided that the non-disclosure was reckless. Of course, the difference being then that the insurer got to keep the premium. The inconsistency of FOS decisions is a well-known issue with them. With that, I will pass back to Claire.
Thank you. So exciting times ahead, but what do the regulators have planned for us? You'll have seen all about the recent decision concerning business interruption cases. Well, hot off the press, well, actually, to be completely honest with you, lukewarm now, the FCA has issued a Dear CEO letter to insurers concerning this. And the letter makes for interesting reading, as the FCA has made clear its expectations of insurers concerning what firms will be expected to do with any cases they have. And this includes even approaching the FOS to ensure they're fully informed about complaints which are currently with them, reassessing all potential claims and complaints, and ensuring that they've been properly settled. We anticipate this will create rather a lot of work though for firms. Everyone involved with this particular area is going to be kept busy, especially in light of the appeal, which I will move on to in a little while. Also, as Matthew has already said, redress limit is going to continue increasing, and that's going to be on an annual basis. It seems a really small thing, doesn't it? But where you're looking at a sizable claim, then it won't take many of those to start eating into either aggregation limits or, for that matter, into any policy excesses which somebody has and which may need to be paid per claim or taken into account. Not surprisingly, this year, regulatory work did come to a little bit of a halt. And that's not that surprising, really. We've all sort of been under the cosh. A key plan for 2019-2020, though, was to launch a new website. And that's supposed to have greater functionality, be more accessible, the content and specific microsites to be put in place to cater for complaints for, from example, small to medium enterprises and claims management companies. And if any of you have tried recently to wrestle with the FOS's website, you probably will applaud this step. There was also going to be a new operating model, and we anticipate that, again, that will have another look taken at it once the world around us has sort of settled down a bit. But they've been busy. The last Ombudsman update that was published on the 26th of August confirmed that between April and June this year alone, the FOS had received over 57,000 complaints. 32% of those had been upheld. And also the FOS had received in excess of 3,500 complaints which looked at COVID-19 issues. It's not clear at the moment if any of those specifically relate to policy disputes, but the chances are they're going to crop up. The FCA has recently confirmed as well that it's delaying further work because of the need to focus on financial stability. And it will be interesting to see how the regulator, and then by default the FOS, approaches the New World Order. Regarding the business interruption case, there was an announcement earlier this week that the FCA is looking to leapfrog an application so that it can appeal to the Supreme Court. We will keep people posted regarding developments with that. So that's a whistle-stop tour, basically, of the FOS, its approach to policy coverage disputes. Any questions?
Well, you say that, Claire. We have a few questions.
Okay.
Being the man in control. We're only going to spend a few minutes on questions. So the first one is, how would you evidence that underwriting action would have been taken for the purposes of inducement? Would you recommend a witness statement from the relevant underwriter in conjunction with the underwriting guide? I think my answer to that, and Claire, you jump on me if you think this is wrong, is that the underwriting guide is the most important of those two things. I mean, the thing about underwriting evidence is it's always done in retrospect, and with the best will in the world, then certainly courts have historically, but also the FOS have sort of looked on that slightly askance, because after the event you always say, well, I wouldn't have written this risk if I'd known that there was going to be sort of that flood or whatever. So I think the underwriting guide is better evidence, but if necessary, a witness statement from the underwriter would also be a good thing. Does that sound right, Claire?
That sounds like a sensible approach.
I'm sensible occasionally. Okay, here's another one. Are you finding that since the expansion of the FOS authority, that we are seeing more inconsistent and incoherent decisions from random appointed investigators, rather than the adjudicators previously allocated to insurers with greater experience in that area of insurance? Am I right in saying, Claire, that they did have allocated people within the FOS and then they got rid of that?
They did, but it's actually a really good question, because I don't know if anybody else has noticed. Sorry, I do use my hands a lot, so I've been moving around. I do apologise. The decisions we're seeing, both provisional and final decisions, are becoming excruciatingly long. I've had one recently that's about 26 pages, which goes into absolute detail on all sorts of different areas, including legal areas, so Section 39 of FISMA and things like that. So I think they're definitely taking a much more diligent approach, if that makes sense.
Is that partially, Claire, the result of, I mean, they had people doing PPI decisions, presumably, and now suddenly these people need something to do, and they're being reallocated?
It wouldn't surprise me. They had, we did a webinar earlier this year, and we looked at the growth of the FOS since its inception in 2000, and it's gone from sort of what looked like a terribly streamlined operation to now 4,000 people, something like that. And you had a lot of people there who were there for PPI, and I think I agree with you. I think that they're being now moved on to other areas. So,
well, also hearing what you say about them quoting FISMA and stuff makes me think that they are possibly dealing with some of the criticisms that their decisions aren't legally robust. And that again may reflect the fact that they have these much bigger award limits now. It's 355,000. It used to be much lower. It used to be 160, didn't it? 150, 160.
It was 150, then went to 160, and then it's just.
So I think they kind of feel they have to be more robust. That's an impression anyway. And there's one more question here. I'll let you deal with this one, Claire. Where a policyholder has raised a complaint with an insurer and accepted the offer in settlement from the insurer in resolution of the complaint, is the policyholder then able to subsequently bring a complaint to the FOS? So complaint made, accepted offer, can they then bring a complaint to the FOS?
They can, but in my experience, they will be given quite short shrift. You've reached an agreement there, so there has been a meeting of minds. They followed the first stage of the complaint process that's been discussed. You've been offered a sum of money which you've grabbed with both hands and gone away and sorted out, to then seek another sum of money for effectively the same issue. They don't tend to like that. I've only ever seen one where the complainant has actually received extra money, and that's because there was a minuscule difference in what they raised with the FOS. But it's
generally the FOS would just kick that out, I would have thought. I mean, they do. They don't like that kind of thing. You go, one more question. Do FOS publish overall success rates on whether complaints are upheld? You mentioned 32% earlier. Is this going up or down?
It depends on the complaint area.
They split it up by different types of complaint, don't they?
They do. So they publish regular tranches of complaint. It's all available on their website. Sorry, I'll stop waving my arms back.
You know you won't.
It's available on their website. It's a case of drilling down into whatever area you're most interested in. So it will do pensions, it will do banking, and so on and so forth. So you would have to drill down a little bit into the complaint information that they publish.
I'd have to check, but my thought is that the 32% is about the same to what it's been historically, but I'd have to check that. I can do that. I'll have a check. That's my memory. Right, I think you've probably heard enough from us. Thank you all for attending. Once we're done, then a feedback form is going to come up on your screen. If you do have time, please fill it in for us. It's useful for us, and put in there topics for further conversations, webinars, things you want dealt with. Our next webinar is next Thursday, 8th of October, when Andrew Tobin is going to speak about the mechanics of Lloyd's of London. So look forward to seeing you then. Have a good day, everybody.
Thank you.
Bye.